Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking metals. Let's talk about gold, down 2 days in a row now, and the sixth of the last 8 weeks lower. That's assuming we stay negative on the week, which is going to be difficult to reverse gold unless there's some sort of an event. It can happen. We reached a low of 1216.80 today, which is the lowest since that recent low of 1210.70 that happened on July 19th. Also, 11 of the last 15 weeks have been lower closes, so gold has been decidedly weak, and that's simply because there is no major currency crisis, no geopolitical crisis in terms of wars, a little bit of a flare-up with Saudi Arabia and the Yemeni rebels attacking their ships, but other than that, no major governmental crisis, still Venezuela, but not enough to move gold's lever in terms of being a store of value during crises. We also have the dollar a little bit stronger today. Dollar index climbed back up above 95, first time since July 28th, and that was on a down move. It only spent about 3 or 4 days above 95. That 95 is a key psychological level, and because it's been tested so many times, it becomes a technical level as well. And a close above 95, which we got today in that dollar index, kind of changes the momentum to at least neutral, if not up, on the dollar index. And the dollar has an inverse relationship to gold. Dollar gets stronger, gold gets weaker. Has a lot to do with the interest rate curve here in the U.S. steepening and the 30-year Treasury bringing its yields all the way up to 3.13, which is the highest level in a few months for that Treasury issuance as well. Having a lot to do with the Treasury issuing more 30 years, which pushed the price down, put the yield higher. And then also the Bank of England raised rates today. Now, while that doesn't have a direct effect on gold, except potentially the gold versus the sterling was weaker today, so there wasn't that much of a move in that particular combination. But it, again, sort of supports a narrative that the central banks are at least getting a little less accommodative globally. And as interest rates rise, key in the U.S., but everywhere really, gold will fall. So gold looks like it's making its second attempt down to that 1200 level. We'll see if we get there tomorrow or early next week. This is Bob Iaccino talking gold futures from the CME Group trading floor in Chicago.